note, let me bring on board our fundamental guest for today. Joining me is Feroze Azeez, Deputy CEO, Anand Rathi. Well, Feroze, always a pleasure chatting with you. First question really, with what's really going on in the market, 8% kind of correction from all-time highs. There's caution in the air ahead of all the festivities. How are you approaching the market now, and what's your sense? Are you anticipating another 5 to 8% kind of correction from current levels, or do you think the corrective phase, is perhaps coming to an end?
Good morning, Nanta. So if you ask me, of course, it's all about the odds. It's only about probabilities. If you remember on 4th June when the election counting was happening, I said markets can't go below 21,000. The same data points I would like to extrapolate to figure out what could be the larger odds. I personally think the bottoming is very close by. It's not 7-8% away. 4-5% could definitely happen. The odds of 8-10% correction look very, very unlikely, unless something really dramatically happens on the geopolitical side. That's point one. Why do I say so is because 88% were short on 4th of June in the FII index futures. Yesterday, it's about 40. That's point one. So if they're just 40% long, 60% are short, that means consensus view is short. Whenever there's consensus on one side, opposite happens. Unlike the conventional belief, सब सोचते हैं market नीचे जाएगी तब नहीं जाएगी, सब सोचते हैं जब market ऊपर जाएगी तब ऊपर नहीं जाएगी. That's how the markets behave mathematically. Perceptions could be whatever they are. So that's why I would say FII is light. FII sold about 92,084 crores in the first few days of October as we speak. That's point one. Point two, last month the same FII bought 13,000 crores. So the net sale for the last 2 months is about 85,000. That's a reasonable sale. So they've gone light in the cash market. They've gone light in the futures market. DIIs have deployed lesser money than the net flows they've received. Margin funding books are not very high for the top 3, 4, 5 brokers. So we are not skating on thin ice is what my inference would be.
Right. But of course, you mentioned the data point about FIIs, record 10 to 12 billion kind of outflows we've already seen. But would you say that the shorts in the system are, or are expected to see some kind of revival here on? Because once the US elections are out of the way, would you see some bit of reversal, or would you say that China will remain a risk factor for us in terms of flows?
See, I don't see that as a risk factor. Risk factors are those where the impact has not happened. Anything which is largely behind us is not a risk factor. For example, till that show which we did on 4th June, which is an important pivot, 136,000 crores of FII had been sold already. So after election results have come out on 4th June, also there has been net selling. So if you look at the full calendar year, there's been enough net selling. So now the question we have to ask ourselves is the selling largely behind us or ahead of us? And the answer comes as it is little behind us. 5 or 7 years back, the FII net ownership of the free float was 43%. Now it is 35%. DIIs have also reached 34%. This is the first time in the Indian capital market history that the ownership of DIIs is equal to FIIs on the free float of Indian capital market. And the DIIs are getting flows continuously over the last 1 month. If you look at small cap flows, which are a great barometer for the sentiment, may not be for the flows, which is smaller flows, but larger barometer for sentiment, has been 2,200 crores positive in the small cap funds so far in October. Of course, AMFI and SEBI have not got this data. We use an algorithm to protect.
So what should be the positioning, be like right now, in terms of strategy? Should one keep some dry powder, or should one use this dip to get into the market? Is it time to go all in, or is it time to invest in a staggered market in the staggered manner in the market?
Nanta, I think if you asked me on 27th September, I would have said stagger it, because the Nifty was at 26,200 and the long positions of FII index futures, which is a reasonable lead indicator to markets, was 82%. Now it's 40%. So point I'm trying to make is don't wait, deploy money. If it's large cap money, if it's broader market money, just hang in there. and stagger it, like Nandita, you're alluding to. That's point two. Point three, I personally think the fundamental levels of Nifty have now corrected to the actual levels have corrected, as per our opinion, to the fundamental levels. The earnings of Nifty for this quarter, 44%, 15 companies had declared results, and the earnings, rupee earnings for these 44% for the June to September quarter was 106 rupee, 110 rupees, which implies almost about a 3-4% growth only. So earnings have helped us get this good entry point. 3-4% trying to get the trough is futile exercise for a long-term investor. If you're a long-term investor, if you've got a discount of 7-8% from the 52-week highs, you should grab it with both hands.
All right. When you say deploy large cap money, where should one look to deploy money now? Because, if you look at sector-wise performance, earnings performance, FMCG has disappointed, so to say. Of course, there are signs of uptick in rural demand, but urban demand slowing down has emerged as a trend this time around. Autos, if you look at them, there's been a cyclical slowdown playing out. Defense as a story may have played out already. So where should one look to park money? Would you bet on banks? Any other sectors that come to your mind?
Nandita, definitely I would park my money in Nifty or in banks, because Nifty's financial services weightage is about 27.5%. 19% is pure banks. 12 of those are large cap, and totally about 21 banks are there in the large, mid, and small space. So, coming back to your point of where should one park your money, I don't think those unconventional sectors or peripheral sectors are giving you a lot of opportunity. So I would say Nifty or the largest weight of Nifty, banking and financial services, I personally believe have been priced very well, which is 2 sigma lower or 1 sigma lower than the mean valuations. That's because the biggest challenge the financial services sector is grappling with is a flat yield curve. I think it has been underspoken. The problem why there is a there is no satisfactory deposit growth is because India is not used to the same FD rate for 5 years and 1 year. If my dad went to a bank 25 years back, if he got the same rate of 1 year FD and 5 year FD, he would surely choose 1 year FD because it has always been rewarded for long-term parking of money. He is today not being rewarded. So he's choosing a 1 year FD, and the banks are having to get their rollovers, and the deposits renewals, our rates might not be as high, because 5 times if he rolls over is when he gets a 5 year FD impact from a bank's perspective. So the flat yield curve is the biggest problem for the banking and financial services sector. Once that flatness goes away and repos and reverse repos are brought down, I think that the flatness will go away. That will solve the problem of the banking space, and that's where the NIMs will get protected.
Right. And last question really, of course, today is Dhanteras. So wishing you a very happy Dhanteras. But this Dhanteras, what would your bet be within the precious metal basket? Because silver has outperformed gold, right? So what's a smarter choice now, silver or gold?
Nanta, definitely it will be gold. But of course, it will be gold. It is at its peak value. Silver, I think that the volatility never justifies the return it gives. It throws up a 42% standard deviation for the last 1 year on a closing everyday basis. Now, that kind of standard deviations, if you compare it with Nifty's last 1 year's realized volatility, is 18.5. So if you're looking at that kind of standard deviation differential, it better give me 3 times the return of Nifty. Otherwise, on any mathematical risk-adjusted parameter, silver doesn't feature at all, whatever be the projection of industrial demand. Unless it becomes a stable commodity, it does not mathematically fit. On perception and its utility to have utensils at home, that's a different story altogether.
All right, that's the view. Gold over silver, that's the preference this Dhanteras. But with that, Feroze, I appreciate your taking out time and joining in this morning. I would like to wish you a very happy Diwali from the entire team of Money Control. Wishing you and your team a very profitable year ahead.
Exactly, for the same for you, the team, and the viewers as well.
Thank you. Thanks, Feroze. Thanks a lot for joining in.